Guys, today I want to talk about how one property or even 10 properties can create massive wealth over time. Now, it's not going to look that exciting when you look at the math to begin with, but bear with me till the end of the video, and I'm going to tell you some stuff about how you can create more wealth as time goes on, and also how wealth will create itself as time goes on just by sitting back and waiting for it to happen. The way to create wealth with real estate, number one, is buy properties. Number two, maybe you're that person that is ready to make moves and you haven't done it yet, but you're ready to do it. Let's talk a little bit about how you can do it and how it might seem slow at first, like, when you save money and you start investing it and then it just starts to curve up like this and then it starts taking off like a rocket ship. Real estate does that for you too. If you're trying to create wealth, or maybe simply you just want to recreate or supplement or perhaps replace your income so that you don't have to work at a regular job anymore, this is the way you're going to do it. All right, it takes a little time. It's not overnight. I remember real estate investing is a marathon. It's like the stock market. It's like anything else. You invest regularly. You invest as much as you can, and you keep doing it for a period of time. For me, I'm never going to quit, but maybe you've got a goal of a certain amount of money and that's it, and you're going to quit after that. I highly doubt it. Most of us just keep going. But whatever the case may be, guys, it's going to take a little while to do this. Figure 5 to 10 years to get to the point where you can replace your income from your W-2 job. All right, so creating wealth with real estate. So let's just kind of go over some examples of what it costs to buy things and rehab them and what kind of cash flow you can expect. And these are just what ifs, guys. It's going to differ depending on the area that you're in and how much budget you have, but let's just go with this. All right, so let's say you purchase a house for $100,000. You're going to put $4,000 down, and that'll leave a balance of $96,000. Now, this would be an FHA loan or some similar product like that, where you're putting very, very little money down. An FHA, you would more than likely have to live in the house in order to qualify for that loan. A lot of people don't, but that's a gray area. Talk to your lender about that, not me. So you got a loan of $96,000. That would leave a payment of, this is an old number. Let's just use this as an example right now, $404. It'll be a little bit more than that now because our interest rates have gone up. The 40% rule, I'll have Justin put a link for the 40% rule video down below so you guys can watch that next. I strongly suggest you do it because it'll teach you how to quickly evaluate properties. But basically the 40% rule states that 40% of your rent is going to go towards expenses, not including your payment. All right, so that's going to be your house payment plus 40% of the rent is going to be how much it costs for you to own that property every month, whether there's somebody living there or not. So that's the 40% rule. So that would be $440 because we have rent of $1,100 a month. So 40% of that is $440. So that's a total expense of $844 a month. So $1,100 a month, which is your rent, minus $844 leaves $256 a month in cash flow. Now that's not a lot of money, but for a $100,000 house, it's not bad. I could live with that. I would want to see more in the realm of $300 per month plus, but again, this is just an example. And let's say over the years you acquire 10 homes like that, and during that time from year 1 to year 10, you've got your $10,000 now, and you would think that you're going to be making about $2,560 a month in cash flow. But there's a few variables here that we're not hitting on. The rents from these earlier houses are going to go higher as the loan balance goes down. You've also got things like appreciation, and you've got tax benefits of owning real estate. On rental properties, you're going to be able to write off the interest on your loans. You're going to be write off any repairs that you do. You're going to be able to write off mileage driving to those houses. There's all kinds of investment strategies. There's all kinds of investment strategies you can use to lower your taxable income. So you need to take advantage of every single one of those legal things. So your rent's going to go up, your properties are going to appreciate, you're going to save on taxes, and you're going to be able to do one more thing, which we call depreciation. What that means is for the next 27 and a half years, you're going to be able to deduct the amount of money it would cost to replace that property. So let's just say that a property has a value of $25,000 for the land and $75,000 for the structure. Well, you'll be able to depreciate that $75,000 over 27 and a half years. So you just take that 75,000, divide it by 27 and a half, and you get to deduct that much every year off of your income. So you've got so many advantages of owning real estate. The biggest one, in my opinion, the biggest two, is the appreciation and the rents going up. Rents tend to go up a little bit every year. This year alone, our rents are going up, I believe, $3,600 a month just by actually bumping all of our rentals up just a small amount. We own quite a few rentals. So that's an extra $40-some thousand a year that we're getting in rental income just in 1 year. Let's say I didn't buy any more properties. Let's say I didn't pay my properties down. I'm still making an extra $42,000 a year extra generally every year on rent raises. And that goes up over time too, right? The higher the rents go, the higher the percentage of rent rates go up. And so you're getting a raise every year, just like you would with your W-2 job. And you're also appreciating every year, more than likely. Now, some years you're gonna go down, but most years you're gonna go up. I've got some properties that I've got one right now that I paid $600,000 for, and I've got it up for sale for $1.9 million. That's a massive appreciation over the last 10, 12 years, but you can do it too. You're gonna take advantage of these markets going up and down. We're gonna buy down, we're gonna sell up. We're gonna buy all the time, but we're always gonna sell on the upside. So that's another advantage. So this $2,560 a month really isn't a true number when you consider all these other benefits in. This is gonna be more like $10,000 a month by the time you've got your 10th property, all right? So keep that in mind, guys. It's a long game, but it's well worth it. Think about this, guys. If you could replace your W-2 income times 2 in 10 years, would that be worth buckling down, working hard, buying properties religiously every year, making the sacrifices that it takes to do that so that 10 years from now, you can wave goodbye to your W-2 job, you can say hello to traveling, the van life, doing whatever you want because you've got enough money coming in every single month to actually satisfy all your financial needs. How about spending more time with your kids, spending more time with your wife, your friends, doing your hobbies, traveling, whatever you want to do, maybe working with charities, whatever it is that makes you happy. How would that make you feel to be able to do that all the time? Guys, it's possible to do it. I'm telling you right now, I don't work a lot of hours. I spend more time doing videos than I do anything else anymore because my rental portfolio basically works on. My rental portfolio is on autopilot right now. I have a management company managing it. The repairs are done by somebody else. I basically look at my paperwork every month. It takes me 1 to 2 hours, and that's it on my rental portfolio. Now, I've got other things going on. We have our education business. We're also always buying more properties and moving into different businesses and things like that. But that's only because I want to keep working because I like it. But my rental portfolio needs no work for the most part at all. I work, maybe 40 hours a year on my rental portfolio. That's about it. So guys, if you want to learn how to do that, there's a link down below for my Deals to Profits Mastermind. I'll also show you how I've raised private money to fund all of that. I'm telling you, this is the best decision I ever made was getting into real estate investing. I've done everything there is and I've made a lot of money in my life, but this is by far the best I've ever done. You guys can do it too. If you like this video, please hit the like button, subscribe to our channel, sign up for notifications. Justin loves to see that. And guys, I look forward to seeing you next time. See you later.